Welcome back. And in our top business story, the UAE economy grew nearly 5% last year off the back of high oil prices, according to the latest report by the International Monetary Fund. The report added that the economy continues to recover from the fallout of the global downturn. According to a local daily for last year, the report stated that high oil prices and increased production, strong growth in Asia, and the UAE's safe haven status contributed to an estimated real GDP growth of 4.9% in 2011. It added that real non-hydrocarbon growth picked up to an estimated 2.7% last year, supported by trade, logistics and tourism. For 2012, the IMF projects oil production to be flat, whereas non-oil growth is expected to strengthen further to 3.5%. The Dubai International Financial Centre has signed a memorandum of understanding with New South Wales Trade and Investment, the government body responsible for driving sustainable economic growth in the state of New South Wales in Australia. The MOU was signed by Mr. Chris Eccles, the Director General for the Department and Premier and Cabinet, and Abdullah Mohammed Al Awar, the CEO of the DIFC Authority. The new partnership will enable the DIFC to connect with financial institutions in New South Wales and will support the promotion of unexplored investment opportunities between the two parties. Al Awar stated that the partnership presents vast mutual opportunities in the areas of investment, education and financial sector development. He added that the GCC region is expected to spend about $968 billion on projects, including infrastructure developments over the next decade, while infrastructure expenditure in New South Wales is estimated to be in excess of $770 billion between now and 2018. Two-way trade between the UAE and Australia stood at over $5.3 billion for 2010 and 2011. Inflation in Dubai fell 1.5% at an annual rate in April and 0.2% from March, according to the latest data from the Dubai Statistics Centre. The data released on Wednesday showed that the fall was due to a drop in food prices, which fell 1.6% in April compared with the previous month, while transport costs were flat. The report added that Dubai has seen prices fall by 1.4% on average so far this year, while annual falls hit 1.9% in March as the property market remains immersed with new residential units. Costs of housing, including rents and utilities, dipped by 0.1% month-on-month in April, the smallest decline this year. Dubai Financial Markets UAE-listed companies recorded 100% compliance in disclosing their Q1 2012 financial results within the deadline of 45 days from the end of the period. So with that, let's now take a look at the stock indices across the GCC. So what is the likelihood of additional stimulus from the ECB, and what can we expect looking forward? Well, we earlier spoke with Bruce Powers, the head of research at Trust Securities.
Yeah, the central banks have pumped a significant amount of liquidity into the financial system, and yet the economic outlook remains uncertain. We've been in an extremely low interest rate environment, which has forced investors to jump into more riskier assets such as equities, in order to have some possibility of beating inflation. This has been helpful to the equity markets until recently. So I think there's a good chance that the European Central Bank will eventually provide more stimulus. We have many of the global equity markets have now turned bearish. The growth is slowing in China, and part of Europe is in recession. But an important component is that the European banking system remains at risk. Last week, we had France take over its fourth largest bank, and then this week, earlier in the week, Moody's downgraded 26 Italian banks. So this is a kind of an ominous sign for Europe. As far as investors go, I think, in my opinion, at this point, investors will be better off waiting for a little while before jumping back into the markets.
Bye.